NIO stock is a very popular one amongst the retail community. The stock hasn't really performed as it is down 32% since it IPO'd in 2018, and this stock is extremely volatile. For example, $9 per share in the IPO then fell all the way to $1.50 per share, which is an 85% drop, then climbed all the way to $61 per share when EVs were trending. This is a 3,300% upside, which is insane. Then fell 95% to around $3 per share, and it is now currently at $4 per share. So this stock is extremely volatile. And let's see if it is finally a buy now that the company has a market cap of $11 billion and the revenue is $10 billion, up 14% compared to last year. We don't have a P ratio yet because the company is unprofitable, although we'll run a discounted cash flow model to determine what returns we can get if we decide to invest in NIO stock today. And also I want to say that analysts have them rated as a buy with a price target of $6 per share, meaning 50% upside. NIO has seen very good revenue growth as their revenue has grown from $4.9 billion in 2018 to $72 billion currently. And they are growing at double-digit percentages in the past 3 years, which is great, although the expectations regarding revenue growth was much higher in the past when this company was growing around 100% per year. And they are seeing very good growth in terms of deliveries. In the last quarter, they reached an all-time high of vehicle deliveries of 87,000 in the third quarter of 2025, representing an increase of 40.8%, which is very good. And I believe this is going to continue to grow because they produce some very cool and good cars. I also like the sector that they are in, which is the electric vehicle market, which, as you can see, is expected to grow massively in the upcoming years, at around a 32.5% compounded annual growth rate from 2025 to 2030. And another positive, in my opinion, is that the hype around the electric vehicle market is gone in terms of stocks, because this tends to push valuations to insane levels. So now that it has calmed down, I think this is positive for this kind of stocks. Now, the biggest issue about this company is the uncertainty around its profit, because this company has been unprofitable for the past decade, currently generating negative 22 billion Chinese yuans, and the same with their free cash flow. As you can see here, it is currently negative, which adds a lot of uncertainty about the future, and car companies don't have good margins. NIO's gross margin is 11%, and obviously their profit margin and free cash flow margin is currently negative. But for example, an established car company like Ford has a free cash flow margin between 3 and 6%. And even a company like Tesla, which NIO is like to compare to Tesla, also has a free cash flow margin between 3 and 6%. And if we take a look at the financial forecast, analysts regarding EPS are expecting NIO to become profitable next year, as you can see here, positive earnings, and then grow them very nicely actually. Now, if we take a look at revenue, it is expected to grow at double digit in the next couple of years, but then grow only around 3 or 4%. Again, this is according to analysts, and there are only 2 analysts covering this stock in 2030. So it is a company where it is very important that you do your own research. And the other big negative is the number of shares outstanding. NIO has been diluting shareholders massively in the past couple of years. For example, last year they issued 11% shares and the year prior 20%. This is horrible for investors because you share the profits of the company with more and more people, and you own basically less of the company. On the other hand, a positive about NIO is their balance sheet, as they have $3 billion in cash and $3.8 billion in debt, which is very good as they can pay off that debt basically whenever they want. And now let's talk about what returns we could get if we decide to invest in NIO stock. But first, if you want access to stockanalysis.com, which is where I've shown all the stock data in this video, you have my link in the description. Now, in order to calculate the intrinsic value of the company and potential future returns, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $2.6 per share, middle 4.8, and high 9. And because the stock is currently trading at $4.5 per share, it means that if my low assumptions occur, you would get a 0.9% annual return on your money, middle 11%, and high 23.5%. Now, as far as my assumptions, I assume NIO grows revenue between 6 and 10% annually for the next 7 years, the average of profit margin and free cash flow margin between 3 and 7%. Now, this is the hard part about valuing NIO because we have no idea what their margins looks like. I kind of went off to other car companies, but again, this assumes profitability day one. And then I assigned a PM price to free cash flow at the end of the 7 years of 16, 18, and 20. If you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And even though it looks like NIO is trading at around fair value, there is tons of uncertainty about the profit margins, and also I didn't assume any shares outstanding. But as you can see, if I assume, for example, that they issue 5% of their shares annually, keep in mind they are doing 10%, the returns are now negative 3.5%, middle positive 6.5%, and high 18%. And although I believe NIO does a great product, in investing, we have to take our biases aside from the product and focus on the fundamentals. And in my opinion, there is tons of risk of investing in NIO because of the uncertainty about the profit and the constant share dilution. And this is why I'm going to stay away from this company for now. I don't think it's cheap enough to justify the risks. I hope you found this video valuable. Let me know what you think about NIO stock in the comments, and I'll see you in the next one.